If every country is in debt, who's the creditor? Imagine waking up one morning to find out that every country on Earth, the United States, China, India, Japan, Germany, even the richest oil kingdoms, is drowning in debt. Not millions, not billions, but trillions. No. Here's the twist that almost nobody thinks about. If every nation owes money, then who exactly is the creditor? How can the entire world be in debt at the same time? And most importantly, who holds the power when all the world's governments are borrowers? This is not a conspiracy. This is not speculation. This is the hidden architecture of modern finance, a system so complex it often hides in plain sight. And today, we're going to expose it. Stay with me to the end, because the answer is not what you think. And once you see how this system really works, you'll never look at money, government, or global power the same way again. The hidden world of sovereign debt? To understand how the world ended up here, you have to start with the most important financial invention of the last 100 years. Sovereign debt. See, when countries need money, they don't just print it. At least not directly. Instead, they issue government bonds, essentially IOUs. Governments sell these IOUs to raise cash. Investors buy them because governments are supposed to be safe borrowers. But here's where the story becomes strange. The modern global debt market is bigger than the entire global stock market. It's bigger than global GDP and bigger than all currency in circulation. And yet, almost nobody understands who actually holds the debt. Is it other countries? Banks? Corporations? Regular people? Or something even more hidden? Before we reveal the answer, we must trace the origins back to the moment when sovereign debt went from a limited financial tool to the world's financial foundation. How the world became a borrower. Our story begins centuries ago, but the chain reaction that affects us today starts in 1944. In a small town in New Hampshire called Bretton Woods. After World War II, the world was in ruins. Economies collapsed. Currencies were unstable. Nations needed a system, a reset button. So 44 countries gathered to design the global financial order. They created the IMF. The World Bank, a fixed exchange rate system tied to the US dollar, and indirectly. A world where debt becomes the backbone of global growth from this moment. The US dollar became the world's reserve currency, but this had a consequence. To finance global trade and recovery, countries began borrowing. A lot, debt became normal. Debt became expected. Debt became the engine. But there was still a limit. Till the day the limit vanished. When debt became infinite. Fast forward to 1971, President Richard Nixon went on TV and delivered the most important economic announcement of the 20th century. He ended the gold standard. Before 1971, the US dollar was backed by gold, and world currencies were backed by the dollar. That meant governments were limited in how much money they could create. But when Nixon ended the convertibility of dollars to gold, this happened. Money became unlimited. Debt became unlimited. The global system became untethered. Governments could borrow endlessly because their central banks could create money to support that debt. And they did. From the 1970s to today, sovereign debt exploded. US federal debt grew from $400 billion to over $34 trillion. Japan's debt reached over 250% of its GDP. Italy, France, the UK, and Canada all faced historic highs. Developing nations borrowed heavily from global institutions. The snowball was rolling downhill fast. But here's the mystery that few people can answer. If everyone is borrowing, who's lending? We're getting closer. The global debt loop. By the early 2000s, something unprecedented happened. Countries stopped borrowing mainly from other nations, and instead started borrowing from their own financial systems. This created what economists call the sovereign debt loop. Governments issue bonds. Banks buy those bonds. Central banks support the system by creating money to buy those same bonds. Governments use the funds to support the economy. The economy relies on cheap borrowing. More debt is issued to keep the system alive. This loop means that a huge portion of global debt is actually owed to the global financial system itself. Not a single country, not a shadowy elite figure, but a network of institutions. However, this also created a ticking time bomb. Because if one piece of the loop breaks, the entire system shakes. We saw this in the 2008 financial crisis, the Eurozone debt crisis in 2010, Japan's near-deflation spiral, and the 2022-2023 debt surge after global lockdowns. Every time the system survived, but only because governments borrowed more to fix the previous crisis. Debt became the medicine, and the disease, the modern debt reality. So, let's answer the big question. If every country is in debt, who's the creditor? Here's the real breakdown. 1. The financial markets investment funds. Pension funds, insurance companies, and mutual funds hold enormous amounts of government bonds. These institutions aren't countries, they're private wealth pools managing trillions. 2. Central banks. In countries like Japan, the central bank itself owns over 40% of government debt, meaning the government owes money to itself. 3. Other countries. China holds US debt, the US holds European debt, Europe holds Asian debt. It's a web, not a straight line. 4. The people, yes, regular citizens. But you have a pension fund, a retirement plan, or a savings policy. You indirectly hold government debt. In other words, the world's creditor is the world itself. It's a circular system where governments, banks, investors, and citizens all lend to and borrow from each other. This is why the global debt system hasn't collapsed. Everyone has a stake in keeping it alive. But that doesn't mean the system is stable, because every cycle of borrowing creates a bigger gap and a bigger risk. Why every solution makes the problem worse. Global leaders have tried. Austerity, money printing, tax hikes, spending cuts, negative interest rates, currency devaluation, none of it worked. Why? Because each fix creates new problems. Austerity hurts growth. Money printing causes inflation. Low interest rates encourage more borrowing. High interest rates make debt unpayable. Currency devaluation hurts imports. Spending cuts hurt public services. The modern system is like a balloon. If you squeeze one side, another side bulges. So governments keep borrowing not because they want to, but because the entire system depends on debt. Modern parallels and shocking data. As of this year, global debt is over $315 trillion. That's 3x the size of the entire world economy. The US pays over $1 trillion per year just in interest. Japan's central bank owns more assets than the country's GDP. The European Union faces record high deficits. Developing nations owe over $1 trillion to foreign lenders alone. And yet, most countries are still borrowing more every year. Why? Because in the modern financial system, debt is not a flaw. It is the operating system. Countries borrow to fund schools, hospitals, and infrastructure, stabilize recessions, pay pensions, maintain global trade, prevent financial collapse. The global economy is built on IOUs layered on top of IOUs, and the biggest mystery becomes clear. We are all creditors. We are all debtors. We are all part of the loop. As of this year, global debt is over $315 trillion. That's 3x the size of the entire world economy. The US pays over $1 trillion per year just in interest. Japan's central bank owns more assets than the country's GDP. The European Union faces record high deficits. Developing nations owe over $1 trillion to foreign lenders alone, and yet, most countries are still borrowing more every year. Why? Because in the modern financial system, debt is not a flaw, it is the operating system. Countries borrow to fund schools, hospitals, and infrastructure, stabilize recessions, pay pensions, maintain global trade, prevent financial collapse. The global economy is built on IOUs layered on top of IOUs, and the biggest mystery becomes clear. We are all creditors. We are all debtors. We are all part of the loop. 3 clear takeaways. Takeaway number 1. Debt is not purely financial. It is political power. Who owns a nation's debt controls its future decisions. This is why countries compete to maintain credit ratings. Takeaway number 2. The biggest creditor in the world is the global financial system. Not one country, not one secret group, but a massive interconnected web of banks, funds, and central institutions. Takeaway number 3. The system survives only if confidence survives. If nations, investors, or citizens stop believing government bonds are safe, the entire system unravels. Final warning, or open-ended thought, the global debt system is like a giant Jenga tower. It works beautifully until one critical piece shifts. And every year, the tower grows taller. The question is not whether the system will be tested, but when and by what. Will it be rising interest rates, a currency crisis, a geopolitical conflict, or something none of us have considered yet? The mystery remains open. If you found this breakdown eye-opening, share this video because most people have no idea how the world's financial engine truly works. Hit like, subscribe, and turn on notifications so you never miss our deep dives into the hidden forces shaping money, power, and history. And tell me in the comments, do you think the global debt system will survive the next decade? Thanks for watching and stay curious.